So I did something pretty cool for this video. I actually took and clipped all of the most important commentary around Nvidia from hedge fund managers today and put it together in this video. Now, I will also share with you my expectations personally for what to reasonably expect out of Nvidia from a technical perspective. Okay, the technicals don't lie. Now, yes, sometimes technical patterns are not recognized, and sometimes technicals look really good and the rally doesn't happen, or they look really bad and the bounce happens. But price action is price action. For whatever reason it's happening, it is price action, okay? The past has happened and we're here now. So from a technical perspective, I'm going to give my take on what tomorrow will likely bring for Nvidia and what this could do for the markets as well. Now, the first clip up here is Josh Brown, and I actually own his book, read it, fantastic book. If you guys have not read it, highly recommend that you do. I think he has the most realistic take on Nvidia. He speaks for a couple minutes here and basically says, like, Nvidia needs to impress investors at the same time, not give the impression of doubles every quarter, right? Because that's unsustainable now that you are a $3.5 trillion company putting up over $30 billion of revenue, expected to be close to $40 billion of revenue next quarter. That's setting investors up for disappointment. Now, the question is, can Nvidia do that or can they not do that? And just take a listen to what Wall Street is saying about Nvidia.
Great fundamental companies. Jim, what about tech? I mean, those are the names that got us to these all-time highs. Are they going to continue to take us there? We got Nvidia coming out tomorrow.
Well, okay, so let's talk about Nvidia. I want to give a hat tip to Josh, who's, the one I think of all of us who's been in it the longest, maybe you too, Jason. But look, the report is likely to be very good tomorrow. There's no reason to think it will be otherwise when you look at what the hyperscalers are talking about, CapEx, and basically every news item is people can't get enough of the chips. As far as the short-term price action, I would say really don't pay attention to it. A lot of this has to do with short-dated options that are people putting on to play the pop, presumably after earnings happen, and then they sell the calls, and that makes the stock go down. So don't be worried about the short-term action. Regarding tech in general, I think for the same reasons that we've all been talking about earlier in the show, people are going to be loath to sell these going into year-end. Again, you don't want to take a taxable gain, and if you're indexed or in some way benchmarked, you're not going to want to take the risk of falling behind the benchmark. By the way, and I just want to tie this into what Josh was saying a second ago, when you talk about bottom fishing and why it's really a bad idea right now, is because the opposite of what I just said applies. The things that have gotten decimated this year are likely to be tax loss candidates. They're likely to get bear mauled in December. That's not where you want to be shopping right now.
Jason, I know you've owned Nvidia. Jim just said you might have been in it the longest. What do you make ahead of the print? Is it too late for someone that hasn't gotten in at the price action that we're seeing now?
I don't think so.
Okay.
I think the question is obviously how sustainable is this ongoing AI compute demand? How sustainable it is going forward? Yes, the stock's up 189% year to date. We're expecting about $33 billion worth of revenue. We probably will surpass that somewhat. I think in the next quarter, however, when you really start to see Blackwell come through, that will be the bang out quarter, which is the quarter that we're working through right now, which we potentially see $38 billion worth of revenue. So I continue to like this story. We hear from the hyperscalers and all the CapEx spend that's going in this space that obviously Nvidia continues to capture. There's not a lot of competition for them currently. So I continue to like the stock, and I think that maybe you're not buying it right here, but there will be opportunities that present themselves. We've seen how this stock has traded over the last few quarters.
Josh, what are you waiting for ahead of Nvidia as an owner of this name as well?
There's a report out there that the implied swing for Nvidia, up or down, is expected to be about 8.5%. That's in line with the average swing that we've seen over the last 12 quarters, but the company is much bigger than it's ever been. It's $3.5 trillion. So a swing of that magnitude is almost $300 billion, which is more than almost every publicly traded company's market cap. So we are basically looking at a situation where the biggest, most loved, most celebrated, most well-regarded stock in the entire market is coming out with an earnings report that yet again they guided higher going into. Analysts are now looking for $33.28 billion, which was a guide up from last quarter, 70 cents in earnings per share. That equates to 84% year-over-year revenue growth and 89% earnings per share growth. So my comments here would be, yes, we all hope for the best, but let's all be very honest with each other. A company at $33 billion in revenue being able to do 84% growth on that and then telling you they're going to do it again next time is very low. I think the tightrope that NVIDIA now has to walk is to remain optimistic about the future, but not continue to push out those expectations and give people the impression that year-over-year sales doubling for a $3 trillion company is in any way realistic as far as expectations. I think they get it. I think there's a way to do that. I think there's a way to give guidance, sound optimistic, but not keep painting yourself into a corner of people looking for doubles every time you report. We'll see if they can pull it off. That's what I'm watching for.
Next up, we have this clip from KeyBanc's John Vin. He says Nvidia remains extremely well positioned for growth.
John, welcome to you. Let's start with what could kind of constrain the growth story. What do you see?
Yeah, I think they're going to report very strong earnings, but I think there's going to be some limits in terms of how much upside they're going to be able to post on the guidance. I think there's a number of factors there. With their current generation Hopper GPU, we think there are constraints in the China market. China is really pushing the hyperscalers in the China market to use more domestic solutions. There is a China compliant SKU, the H20 in that market, that's probably going to get pushed out a little bit in Q4. Customers obviously are transitioning to Blackwell. Blackwell is their next generation GPU. It's ramping right now. So some of these customers are opting to push out their orders for Hopper in exchange for Blackwell. And then lastly, from a supply chain perspective, we think NVIDIA recently made a decision to switch their power management IC vendors. And I think that's creating some near-term bottlenecks from a supply issue, which could limit how many of these new GB200 NVL server racks they could ship in Q4.
So I'm trying to figure out whether we should really game out what could happen with earnings, John, from your point of view, or whether we should look longer term, ignore the noise of this week, and try to figure out where this stock's going to be in 6 months' time.
Yeah, I believe that most investors should look through some of the near-term noise here related to earnings. I think NVIDIA still remains extremely well-positioned to grow outsized earnings next year. Our numbers for 2025 are well above consensus. Blackwell represents a pretty significant upgrade cycle because they're going to be shipping much higher ASP server rack solutions versus simply shipping GPU cards.
And I'm seeing here those figures that you're referencing. So again, there are your price targets, 180 on NVIDIA right now. What about the rest of the space? I mean, do we even talk about Supermicro?
Supermicro obviously is a customer of NVIDIA. We like several of the other AI chip vendors in the space, namely like an AMD and a Marvell. This is still a very expansive space. And, more than one vendor stands to benefit from AI chip growth.
So I was actually surprised after reading the headline of that clip. I was expecting something that sounded a lot more optimistic or bullish for this current quarter that we're in for Q4, not the results that we're going to get reported. That was for Q3. But for Q4, it sounds like there's going to be some issues with the guidance, and that could be an issue for the stock. But yes, long term, KeyBanc says there's a lot of growth for NVIDIA, and I think there is long term. It's just really hard to make a strong bull case when the stock's already at a $3.5 trillion valuation. To get another 100% rally from here, that would push NVIDIA to a $7 trillion company. That would be over 25%, around 25% of the entire US GDP. That is crazy. And I think that's the real question here is, even if things go perfect, even if, NVIDIA does have this bright future, which I think it does. I personally think the world could look like the Jetsons in like 50 years, like super futuristic. AMD, Nvidia, all these names, these semiconductor names are going to be dominating the world over the next decades. But in the near term, as Wall Street always focuses on, the near term, it's hard to make a super strong case that this is your last opportunity to buy Nvidia at a $3.5 trillion, company size. Eventually, Nvidia is probably going to be a $25 trillion company over the next 20, 30, 40 years. But is it going to be just straight up in a line? Like, I mean, a 20% rise from here in Nvidia would put Nvidia at a $4.2 trillion valuation or company size. Even that just sounds hard to fathom. And some people are expecting Nvidia could rally 20% on this earnings. And it just gets to that law of large numbers point where maybe we're biting off more than we can chew, because this current valuation is implying that things not slow down, but continue to just grow and grow and grow and grow. And I don't know, following today's 5% rally, I think you've priced in that good earnings report that it seems like everyone's expecting. Now take a listen to this article that says, will overheating hurt Nvidia?
Nvidia will meantime release its quarterly results after the closing bell tomorrow. Expectations are high despite reports of overheating issues with its newest chips. Our next guest believes Nvidia will beat estimates, and there is no alternative as a pure play in this area. But he does have some add-on names that support the space if you're looking for a little bit lower volatility. David Miller is co-founder and chief investment officer at Catalyst Funds. David, welcome. Good to have you with us. Your views on Nvidia have changed, I'm told, since the last time you were with us. Explain what you were feeling then and what you're feeling now and why.
Yeah, well, my views have changed because the data's changed, so my views changed with it. Essentially, the old data essentially told you that you should try to model off of Moore's Law. But with this most recent earnings report that we saw from Meta, it's become clear that things with AI are not behaving like Moore's Law, meaning that the Llama 4 models they've indicated will take 10 times as much compute to train as Llama 3 did. And when you look at Meta's last quarter spend, they're north of $8 billion CapEx, and most of that was going to this data networking. So you can see from the hyperscalers that we've already essentially baked in a beat for NVIDIA's earnings, and that's why I'm more bullish than I was previously.
So in short then, because it's going to take so much more computing power and because NVIDIA is really right now the monopoly power in that space, there's no place to go but to NVIDIA to get the power you need.
Exactly. NVIDIA is essentially a pure monopoly, and that's continuing with their next generation Blackwell chips. Those won't be in this quarter's earnings, but they will start next quarter's, and they'll really be baked into the January quarter. But you can already see from the numbers that came out with this very elevated CapEx spending by the hyperscalers, that money is clearly going to NVIDIA for their current iteration of chips, and they've indicated, at least in particular, for Meta, that's going to continue to escalate quite rapidly. But the same trend we're going to see at Google and Microsoft. These companies have no choice but to compete in that arms race.
Right.
You can't afford to lose an AI.
David, thank you so much for being with us. David Miller, Catalyst Funds, co-founder, chief investment officer. David, thank you. We'll see you again soon.
You guys get the idea. Everyone is just so bullish. People do have concerns about what guidance could look like for next quarter, but the expectation is already baking in a really, really good guide, and Nvidia might come out and do that. But if you're expecting a guide of, let's say, 38 billion to 40 billion, you really need like 42 billion to get the stock moving higher, especially following today's 5% move. Now, if tomorrow Nvidia sells off 3 to 5%, then you're in a better position as far as that forward guidance. A stock speaks to you, okay? A stock speaks to you current expectations. So if a stock runs up or does well, you don't even have to look at the numbers to know expectations are high, okay? And when they're this high, like in the case of Nvidia, you need a blowout. You need like Nvidia's first earnings where they just blew out all the analyst expectations. You need that to happen again tomorrow. If it does not happen again tomorrow, then you have a problem. Again, especially when people are all very bullish. It's different if you have a balanced view of bulls and bears even, or if it's like 60-40, 60% are bears, kind of concerned, 40% are bullish, then you can more easily come to the expectation that a good beat is going to send the stock higher. Right now, a good beat is probably not going to send the stock higher. You need excellency out of Nvidia. And that's the question. Do you think Nvidia will give us excellent, flawless earnings and guidance above consensus? Again, next quarter consensus, this quarter consensus, Q4, is about 38 to 39 billion, as high as 40 billion. Do you think, in other words, Nvidia is going to guide to 42 billion next quarter? That's specifically what I want to hear from you guys down below in the comment section. What will next quarter guidance be? Is it going to be 40 billion? Is it going to be 42 or 45 billion? Is it going to be 47 billion? Let me know your thoughts down below. I will also point out that there was 4 different clips on CNBC today that said specifically markets are going higher into year end. Okay. Nobody was bearish today in the slightest bit on CNBC, which I take as an indicator of maybe there's too much bullish sentiment, although you kind of need something to change for the sentiment to change, for that, reversal to actually happen. It could be Nvidia or it could be something else. And again, the more people that get bullish, the more that pendulum starts to swing towards maybe we do have a pullback into year end. Now, from a technical perspective, you do have this longer term trend line that really starts in 2024 when Nvidia took off the way that it did. That was back here around, I mean, literally the start of 2024, January 3rd, the second day in 2024. That's where things just got parabolic for Nvidia, right? That's where things kind of changed, was this year. And there's a pretty clear defined uptrending line here. There's only been 2 instances, one of which was obviously August 5th when Nvidia fell as low as $90. And the other is early September when Nvidia fell from $130 down to about $100. During these 2 instances, they were the only times where this uptrending trend line were really rejected. And for the most part, it was just a couple of days, like August 5th, couple days here, but you actually closed above this trend line and then proceeded to bounce. So from that standpoint, if Nvidia does disappoint, you're vulnerable to a retest of this trend line, which is technically going to be around that 129 to 130 level. That's what a disappointment could do for Nvidia. If we overlay this with your 50, 100, and 200-day moving average, 50-day moving average at $132.42 per share, that would be the first level of presumable respect that Nvidia would see as support. Then you have this trend line in the middle between the 100-day moving average, which is at $125 per share. These are both moving averages I would expect we see a lot of support for Nvidia at. Now, if things were to be really bad, much worse than expected, especially on that forward guidance, like if Nvidia forward guides for like 35 billion instead of 40 billion, right? Then potentially a test of that 200-day moving average around 110 would be in the cards. Now, if we just want to draw another simple trend line here, connecting the high, the all-time high at the time of March 8th, 2024, and the previous all-time high before the newest one set on June 20th, then you get this huge wedge here. Now, I actually don't want to focus on that too much because that's the upper end of the range that Nvidia could potentially target. Like that's not what we should really expect. But that could push you into the around 200 mark around this earnings. I actually want to focus on this trend line, which is not nearly as strong as you would think. Okay, so if things are not a complete blowout, but they're good, kind of meet expectations, then Nvidia could be $150 to $153 stock coming Thursday morning. That would be kind of what the technicals would suggest. Now, the stock's pricing an 8.5% move, which from here, again, that would put the stock at about a $4.2 trillion valuation. 8.5% move would price in almost $160 per share for Nvidia, which again is certainly possible, but Nvidia really needs to check all the boxes to get to that level. Okay, so you're closer to the resistance, presumably this trend line, than you are to the downside support line, which from that perspective, again, just kind of shows there's more meat on the bone to the downside than the upside. I do think the risk is of a downside surprise, a downside kind of recorrection of expectations. Again, we're not going to get bad earnings. Throw that out the window if you think we're going to get bad earnings. We're not. It's just our expectations too high. Now, if Nvidia is able to break past this trend line here around 153, then it's very well possible that you could go on a pretty meteoric run. Now, that would obviously take the S&P higher. That would take everything higher. I mean, if you get a run like that, it's going to be unprecedented on many different scales. Now, MACD is currently at 59.02, so it's really not that overextended, although you did see a jump today from about 51 all the way up to 59, which is sizable. If you look at the Bollinger Bands, this is the 20-day moving average in the middle of the Bollinger Bands and a standard deviation above that. Okay, so when you get to the top end of the Bollinger Band is where things start to get pretty excessive to the upside, right? Where you usually see a peak out in the stock almost perfectly every time you get to, a standard deviation above the 20-day moving average. You tend to kind of peak out. This gray line here, let me remove these to make it a little bit easier to see, right? You tend to peak out there. That is coincidentally sitting right at about $152 per share, $151.36 per share, precisely where this trend line also is. So I think that is a little problematic. Now, the stock over time tends to revert back to its 20-day moving average, which is about $142.22 per share. That wouldn't even surprise me if that happens coming tomorrow. Now, very rarely does Nvidia fall below its this bottom end band of the Bollinger Bands. Again, a standard deviation below the 20-day moving average. That is currently at $133 per share. So with a disappointment on earnings, that is presumably where Nvidia is headed. Now, for whatever reason, if you fall below that and come down and fall below this trend line here at about, call it $130, $129 per share, then you get into a much larger problem. Okay, but to the upside, you're looking at 153 pretty reasonably. If you break that, then you could rally to that 160 level, what's priced in for Nvidia. If you have a disappointment, the 133 level looks to be where we're headed next. Now, in the grand scope of things, that's downside of about 9.5%. So that's actually more than is priced in the options market, but that is on a technical basis where we would expect the stock to go. My opinion is I don't know what's going to happen, but I do know it's going to be a big one for Nvidia. And I do know it will have a large impact on the markets as well. And I got to say again, I don't like the setup that we have heading into Nvidia. I just don't. You couldn't convince me otherwise. It's just not favorable. Okay. So let me know what you guys think down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.